Hi there, you're here with iHealthBrokers, and today we're talking about those expected drastic premium rate increases for marketplace plans in 2026. So recently there have been some legislative changes, as well as some legislation that is set to expire at the end of 2025, which will dramatically affect marketplace plan premiums. So let's dive right into it. Insurers across at least 19 states are proposing massive premium rate increases for 2026, with the median hovering around a 15% increase, although it is highly likely that you will see an increase of much more than 15%, and we will talk about that in just a moment. This is the largest premium rate increase in over 7 years, according to KFF and NPR. Now, some insurers, like Blue Cross Blue Shield, are requesting an increase of 27%, and insurers across Texas are requesting at least 20%. These premium rate increases are being driven by several factors, including rising medical costs, expensive new medications like GLP-1 diabetes and weight loss drugs, workforce shortages, and higher emergency room use. But a particularly troubling factor is the expected expiration of those enhanced ACA marketplace subsidies. Now, if this happens, and it's likely that it will, then you could expect to see your premium increase by possibly 75%. So will this affect you, and what steps do you need to take? If you'll recall, these enhanced subsidies designed to provide extra cushion for people using marketplace plans were introduced under the Inflation Reduction Act and the American Rescue Plan Act. With the expiration of these enhanced subsidies, then it's highly likely that families who are ineligible for Medicaid, but possibly also ineligible for those larger premium tax credits, may find themselves completely unable to afford a marketplace plan. KFF warns that approximately 4 million people could lose coverage, with an additional 5 million willingly dropping their coverage because it's simply unaffordable. Now, truly, this is a vicious cycle because this will shrink the pool of beneficiaries to those who absolutely need health insurance because of declining health or larger health needs. And as we've discussed in other videos, rising premiums leads to lower enrollment, leads to a sicker population, leads to rising premiums, and the circle goes on and on and on. So lawmakers are currently debating whether to extend these enhanced subsidies. Now, some Republicans support drug pricing and Medicare reforms in a bipartisan package. However, some are hesitant to extend the ACA subsidies unless Democrats agree to offset the costs. That means the renewed subsidies hang in the balance. Let us know your thoughts in the comments below. Additionally, there have been other big changes in the form of the One Big Beautiful Bill. First, Medicaid is being cut dramatically. It's set to cut over $800 billion over a 10-year period. This means millions will lose coverage, especially in those states with expanded Medicaid programs. The CBO projects as many as 10 million people could lose Medicaid just from the bill's provisions alone. States are also being required to impose stricter eligibility, including verification and more frequent renewals. If you miss paperwork or don't verify, then you may lose coverage with no guarantee of re-enrollment and no grace period. But let's switch gears and talk about how the One Big Beautiful Bill affects marketplace plans. Now, we've already talked about how those enhanced premium subsidies are set to expire in 2025. That's already been established. However, under the One Big Beautiful Bill, if you were eligible for subsidies, they will no longer be automatically renewed. As of 2028, you must re-verify your income, family size, etc. annually, or you will lose those premium subsidies. And again, there is no grace period for verification, so make sure you have your paperwork prepared. And if you were someone who was eligible for a year-round special enrollment period due to your FPL, if it was under 150% of the FPL, which is federal poverty level, make sure you enroll during open enrollment or you will lose access to those premium tax credits. Again, there is no grace period anymore. Speaking of premium tax credits, remember that when you apply for a marketplace plan, you're basically asked to estimate your income for the upcoming year. Now, people who estimated too low actually would have to pay a portion of their premium tax credit back. However, usually it was capped at a certain amount for lower income families, so you might not have to pay the full amount back if you were inaccurate in your estimation. However, under the new law, there is no repayment cap, so you will be required to pay the full amount back if your estimate is inaccurate. And now we need to talk about a huge change that you absolutely need to be prepared for, which is that the open enrollment window is shrinking. It had been expanded to 8 weeks in most states, but now it is shrinking back to 6 weeks. That means that in most states, to enroll in a marketplace plan, you will have between November 1st to December 15th. So please, please, please do your research in advance. Those plans are usually available for preview in advance, and also make an appointment with a broker in advance. This is a time of tremendous change. Health insurance is confusing enough as is. You need an expert on your side. If you'd like our assistance, you can reach us at the number on the screen or in the comments below. If you have any questions, we are more than happy to help. We are licensed health insurance brokers and we're licensed nationwide. Additionally, as I said, there are changes coming. So please make sure to subscribe to stay up to date. We do release these videos on a weekly basis. And of course, make sure to like this video so that we can get this information out there. All right, let's get back to it. Now, these procedural changes may not seem like that big of a deal to you, and perhaps they're not if you are preparing in advance. However, millions of people could lose their health insurance just because they're unaware of the changes or they don't have adequate paperwork to provide. Now, I do want to take a brief pause and talk about something that isn't quite all doom and gloom, and that has to do with HSAs. A lot of our clients and our viewers are particularly interested in HSAs, which are health savings account, because of that triple tax advantage that they offer. This is especially wonderful for small business owners or gig workers and freelancers. Basically, an HSA is an account with your money in it. The amount that you contribute is pre-tax, therefore lowering your taxable income. Now, this may be especially important with the reduction of those enhanced premium subsidies. Reducing your taxable income, your MAGI, may push you into a different bracket, which may make you eligible for a premium tax credit if perhaps you weren't eligible before. Additionally, not only is the amount that you contribute pre-tax, but those accounts themselves are interest-bearing, and the interest accrued is not taxed. You can invest a certain portion of your HSA, and the earnings on those investments are also not taxed. So that is the triple tax advantage. Now, you can use the funds in an HSA for qualified medical expenses, and the list is truly long. Don't worry, if you have money in there, I'm sure you could use it. You can even use it for Advil if you need. So it's a very extensive list. So HSAs had been a little bit difficult to find on the marketplace, but the good news is now bronze plans and catastrophic plans may start to offer HSAs as well. So this could be a great way for someone who needs to save money on their health insurance premium. Usually plans that are bronze level, because they have higher cost shares, do have lower monthly premiums, and then if you're contributing to an HSA, you may be able to lower your premium further. And catastrophic plans are also usually offered at a lower monthly premium because they really only provide coverage for the most extreme medical cases. They're there to just protect you should the worst happen. So if you suddenly find yourself unable to afford your marketplace plan, you may want to look into a bronze plan or a catastrophic coverage plan that offers an HSA. Today, community health advocates report that families earning just above the poverty line will struggle to afford even the cheapest silver plans without subsidies. Hospital systems, especially safety net in rural areas, worry that uncompensated care will spike when people lose coverage or can't afford treatment. And rural hospitals may struggle even with a $50 billion rural healthcare fund that the bill allocates, since it barely offsets the long-term cut to Medicaid funding. So if you are currently enrolled in a marketplace plan, what do you need to do to prepare? Well, first, expect higher monthly premiums next year and prepare some extra budget or check if you can still qualify for subsidies. Also, and I cannot stress this enough, please make sure to do your research in advance this year. That open enrollment window is shrinking, and 2 weeks may not seem like a whole heck of a lot, but at the holiday times, those 2 weeks can just fly by. So please make sure to do your research in advance and also make an appointment with a broker in advance. With the window of enrollment shrinking, that means that brokers will be busier than ever during those 6 weeks, and it may be more difficult to get an appointment. And remember, in doing your research, you may want to now consider a bronze plan with HSA or even a catastrophic coverage plan with HSA. And there are some other options as well. So in addition to things like bronze level plans, catastrophic coverage plans, there are short-term medical plans, although the window has now been shrunk down to 3 months, so it's really not a long-term solution. There's also hospital indemnity plans that you could use in conjunction with a catastrophic coverage plan to possibly provide you more comprehensive coverage with a lower monthly premium. And come to think of it, you could even explore a critical illness plan as well in conjunction with a catastrophic coverage plan. I would just highly encourage you to stay away from health sharing ministries. They are not regulated at all, and there are truly some horror stories that come out of health sharing ministries of people being rejected and not being able to have any type of reimbursement for their claims. Now, if you'd like to learn more about some of these alternate types of plans that I just mentioned, I highly recommend you check out this video over here. Also, if you want to learn more about marketplace plans in general or plans if you're self-employed, make sure to check out this playlist. In the meantime, if you do have any questions, please feel free to reach out to us in the comments below. We're more than happy to help. You can also reach us at the number on the screen, especially if you would like to get an appointment sooner rather than later. Before you go, please make sure to subscribe. please make sure to subscribe to stay up to date. And of course, please make sure to like this video so we can get this very important information out there. As always, thank you so much for watching and have a wonderful day. Bye-bye.